What's up, guys? JJFade23. I'm just going to go over something real quick. Another little video. Guys, I want to show you something, right? This is the kind of stuff that people do when they want to be really good at trading, all right? We went over this before, quanted, right? So check this out. This year, this month, January so far, this is my criteria for the main scanner. It's not considering the news and all that, but $1.50 to $10, gap over 45%, pre-market volume 1 million, and less than 350 million market cap. So check this out. 28 gappers, 75% closed red. This has been like this for a while now, 73, 74, 75 the past few years. This is crazy. That means with no other criteria, 3 out of 4 of these are going to close below its open price. That's a huge edge. The median spike has gone up a bit from about 16 to 17% last year to 22%. That's because we've had some pretty big stocks that have ran pretty far after the open. But that's fine, guys. All that does is give me more conviction. When we're in a fader market, guys, where everything's closing below the open, I love this when this happens. I'm just waiting for the stock to give a good trigger or a lower high and just friggin', hit it after and get an even bigger percent gain. So, guys, what I want to show you, what helps with this kind of market when the stocks are spiking like that, but you still know most of the time they're not going to go to day 2. They're going to come back down. So, guys, this is what I like to do. This can help you a lot, right? So let's say, for example, NLSP, right? Guys, I take this data, all right? This quantitative data, right? Throw it down here, okay? And I calculate. All these little things will give you conviction and confidence, right? If you're just shorting at the open, you don't know what you're thinking about, what you're doing. You're looking at daily levels or resistance, whatever, right? We combine daily levels, resistance with triggers, but also the knowledge, guys, right? Look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. 15 of these 28 stocks is not going to spike more than 25%. That's 53% of these won't even make it 25% spike off the open. Now, the next level, I usually do 25%, 50, 75, and 100. So 53% are not even going to spike 25%. That means, guys, if you're looking at a chart, right? Look at this. So that means 53% of these stocks, right, guys, aren't even going to go like this. 53% aren't even going to, let me just shrink this down a little bit. 53% aren't even going to spike that high, you guys, right? This high. So what I like to do is put levels on my charts, right? And put 25%, 50%, 75%, 100%. And guys, if you're in a market where things are squeezing and they're going to day 2s, well, that can affect this. But when everything's still fading, all this does is make my conviction go up, right? When the stocks go higher, because look, 28%. If you go to the next level, 75%. You got 22 stocks out of 28. You got 78%. 78% of the time, stocks won't go higher than 75%. 78% didn't go past that level. Only 1, 2, 3, 4, 5, 6 stocks went out of 28 went over 75%. Now, obviously, that's not going to help you trade unless you're using a 75% stop and having a 1 risk reward or something, whatever. I don't trade like that kind of system, even though I could if I wanted to. If I wanted to really go into the data like this, guys, there's a million different ways to trade. You can have a setup where you say, "Oh, I'm going to short every gap of if it spikes 5%, I enter with a 50% stop or a 30% stop or a 75% stop cover at the end of the day." People do all types of shit and make money. The point is to have your brand expand and your brain be thinking about all this stuff. Okay? So for me, what I like to do in a very big fader market, I put those levels on my chart combined with daily levels and resistance. Now I know, okay, for example, let's look at this, right? NLSP the other day, okay? Let's take this off of here. The stock's opening right here. We're in a big-time fader market. Where are the key levels? Well, there's a key pivot right here. It's also a $0.50, 350. Then we have another one at 380. Another one up here, but I don't go marking all of them off on my charts. I just mark the next couple. And then now, guys, we look at we go back intraday, and my brain's telling me before the open, okay, 53% of these stocks don't even make it to this level here. So 53% of these stocks dump with somewhere in this range. In this range, we have a key day level right here to risk off, 350, right? So the stock, whenever I stretch it. I hate when I zoom in. Like when I shrink it down like this, it got messed up when you do stuff like that. All right. So I already know there's a daily level here, right? 53% of these stocks don't even make it to that green bar. So somewhere, there's a 50-50 chance of dumping somewhere from the open to this bar. And we also have a daily level there to risk off when you get like a nice trigger candle like this. Nice fake breakout trigger candle close to the level, right? Knowing that the stocks are going to dump within and knowing that we're in a hardcore fader market. But the point of this video isn't so much of how to trade. It's that you need to be thinking, thinking all this stuff, working all this stuff behind the scenes. And let's say NLSP started to run, all right? It starts to run. It's going higher now, all right? Going higher. Wow, now we're up to this 460 level where I know 64% of stocks aren't going to be able to go higher than that. Do we have any day levels near there to risk off of? Right? So basically, guys, the higher it goes, and then if it goes all the way up to 75%, that means I know 78% of these are going to fail from here and probably still unwind all day in this market, right? So, guys, now you combine that with things like gap stats. I don't know. I always talk about gap stats like people like everybody knows what they are. Guys, there's a thing called gap stats that you can get on oh, shit. Hold on. What the hell's the name of that company? Hold on. TradingView, right? TradingView or I don't know. It's one of those companies. Yeah, TradingView, I think. I don't know. Anyways, you Google it. Gap stats indicator. Look, guys. So combining all the knowledge that you have, like news-related things, what's the news, the gap stats, dilution, how many times the stocks are going to fail before they even spike 25% or 50%, and where the key daily levels are. Guys, this is gap stats if you don't know what they are. All right? See this right here? Look at this. NLSB has an average spike of only 11%. It had 12 gaps over 20%, closed below the open 92% of the time. And it fades below the open price by 19%. This is an incredible stat to have. Some people think like, oh, who cares about gap stats? Guys, look, this is what I'm talking about. This is what I mean when it comes to putting in the work. Do you know what this is? This is all the gappers. Me and Keish back tested, right? We back tested the gap stats, okay? So what this basically tells you, guys, is that stocks that had 75% or greater gap stat, if the gap stat said it closed below if the gap stat said the stock closed below the open 75% of the time, those stocks closed below the open 96% of the time. And if the gap stats were less than 75%, closed below the open, those only close below the open 60% of the time. So that tells me right there, why do I want to bother shorting stocks that have shitty gap stats? I don't. Gap stats is a huge indicator. But do you see how, guys, if you're sitting there wondering, how do I build a system? This is how you build a system. All these little things. First, you have to make a scan. Okay, I like short and small caps between $1.50 to 10. Market cap less than 350 million. $1 million volume. Great. Now, things pop up on your scan that fit your criteria. You look at the news, you know news-related things. Oh, that news usually fades. Oh, that's fluff news. Oh, that's actually really good news. Wow, that's really good news. And that stock has shitty gap stats, meaning it only closed below the open 40% of the time. Why do I want to short that when I know that news is known to run, that thing's got a tiny float, and even without that news and that float, stocks that close below the open less than 75% of the time only close below the open 60% of the time. Okay, this is what I mean. You all add together. Now, once you fine-tune that down to like you're shorting the stocks with the best gap stats on the best scan that you created for stocks that fade, close below the open 75%, even with no stats, now you know the news. Now you know most stocks fail before they even spike to this high. Oh, half the stocks. Then most of them fail before they even spike to this high, and then 80% fail before they spike to this high. Right? So now you're looking for your daily levels in these zones. Okay, we have a daily level here. Let's say we have another daily level here. Well, that's good because that's because 64% of the stocks aren't going to make it to this level. And then, guys, in this kind of fader market, if they do keep trending, don't give me any triggers at key levels. Let's say they just blow through this level, come back, go up to here, no trigger, just grind right through it. I'm I'm like licking my lips up here because I know 80% of the stocks aren't going to go past here, and we have a really good resistance level here. I'm just waiting for a trigger or a lower high. Guys, when the stock's up 175%, well, let's say it already gapped up 200% or 100%, right? Now it ran another 50%. You don't have to be the first to catch the top to short. You don't have to catch the top. You don't have to scale in. Let it reject. Let it come up here. Guys, the stock's up so much it's going to fade. Let it come up here and show you a reason, right? Let's see. It goes up. It pulls back. It goes up. It tries to break out. And then it fails, right? Well, that's a good reason to short. You don't have to short right here on the fake breakout. You can. Let it come back, break a level of support. Now, instead of making higher highs and higher lows, guess what? We just did a fake breakout. We made a new low. Now we have a lower low. Well, guess what? We have a lower low. So now we can short the higher low on the next bounce. And we have plenty of risk reward still to short. Plenty of risk reward because the stock's up so much. And most of these best cover end of day. All right, guys? So you don't have to catch the top. You tell me what's a better trade. Stock's going up. You take a starter here, you take a starter here, you take a starter here, and now it dumps. Now you have a 1-to-1 risk reward, or just waiting for the lower high to take a starter here, or take full size here, risking off here, right? I never understood that. People that scaling, they're trying to catch the top. Why do that when you could just not even catch the top and just get in on a lower high? Or you use good triggers like trend breaks, fake breakouts, or giant stuff candles at key levels, especially when the stock's pushed its really, really high range where 80% of the stocks fail. So, guys, when you combine all these things together, I guess I'm not really trying to show you how to trade in this video. I'm basically just saying these are all the things that you have to be looking at, guys. When a stock opens, I'm looking at the volume. Why am I looking at the volume? Because I know what the volume is going to look like on stocks that are going to spike like crazy, right? I know that the stock's pushing on like 500,000 or a million. It's not going to probably go that far. I also know that if the stock's pushing tons of volume and it's not really moving higher, then it might be struggling. So these are all things that you start to like pick up over the years. You know your daily levels. You know your triggers. You know what the volume should look like. You know reversal volume when you see it, right? When a stock's reverse, guys, a lot of times they make an elevated volume on that reversal. So the stock's running. Boom. You get a trigger at a key level. You also have the biggest volume of the day or a spike right there. That can quite often be the top, right? You'll notice that not only on small caps. I mean, you notice that on a lot of stocks, guys. I mean, if you like just look at charts. I used to practice trading. Let's say Tesla, for example, right? Guys, look. See this? Reversal volume. And it bounces right there, right? You see, it's usually like really close. Like, look right here. Big volume exhaustion, reversal volume, and it bounces, right? So you get that a lot. So, I mean, like, it's a lot of, it doesn't mean it's a total redirection of the stock, but a lot of times you can look, reversal volume. So what I used to like to do is take the candle charts off, right? You take the candlesticks off and you practice your entries and exits by looking at the volume, all right? So like right here, you see that was a pretty big volume, but it wasn't quite the reversal. It went over here a little more. But you'll notice a lot of times, it's not like totally accurate, but look right here. Volume elevated, reversal point, right? So it's sometimes you take it off and you just practice like, oh, where do you think it bounced from? What do you think it rejected from? Where do you think it bounced from, right? And then you mess around. See, look, reversal volume. See how it's a little elevated between the candles near it? Reversal. Quick reversal, right? So you can see even like right here, you have it's like lower volume and then boom, a little spike on the reversal. You get that a lot with the exchange of buyers and sellers is stronger, like boom, reversal. So, I mean, there's so many little things that you can just fine tune in your trading, right? It's just like, let's look at some other charts. Now I'm getting carried away. I'm not even like close to what I'm talking about. And number one, I don't even use fucking 1 minute charts on large caps. But anyways, guys, you see what I mean, all right? And it's like, look, right here, reversal, that's kind of the end of the day, doesn't matter. But you see the elevation, right? You see right here, big elevation in volume, it bounces. Big elevation in volume, so, sometimes you get something like this where you get a big elevation and then it quick doesn't pull back that far. But look, right here, you get the idea, right? You see the humps of volume, usually where stocks are making strong pivots, whether it only be for 2 minutes or 5 minutes and then comes back down, but you get the idea, right? It's a good little cheat sheet to look at. Well, let's say you're looking for a stock to long, even on the daily chart, guys. I use this sometimes for that, right? You're looking at a stock. It's coming down. It's coming down. It's coming down. You want to see the volume spike before you try to long the reversal, right? Especially, guys. Now, this is what I mean. Again, let's say you're trying to catch a long, right? Let's say you're trying to catch a long reverse trend or something, or even in the overall big trend, right? So what would you be looking at? Well, number one, you'd want to see a little volume spike, maybe plus a doji candle like that, also extended away from the 21 EMA. And, so these are all little things that you add to pieces of your trading to make it a higher win rate more probable. Little tiny like indicators, right? That aren't like RSI, those kind of indicators. They're price and action volume indicators, right? Candlesticks, extensions away from EMAs, the percent that it dropped before you bounced. So, there's a lot of things you can look at. Anyways, this has nothing to do with what I started this video on. I'm just going on a rant now. But anyway, I did like to practice like that. And then, I would just see like, oh, I knew that was going to bounce right there because of the volume. But you have to be careful, guys, right? There's a difference. Sometimes you get a volume spike on breakouts, right? Sometimes you get this kind of volume spike. Let's say, for example, this didn't bounce right here a little bit. Sometimes, as you see here, this is snapping support here. Sometimes you get elevated volume and then it has continuation. So you don't really want to have, your reversal volume be at the same place as your breakdown volume, right? As your breakout volume, for example. Let me see. So, like, for example, okay, right here, right? See how this volume spiked right here? But that's because we had this pattern forming and then it broke out. So you wouldn't be trying to short this breakout because you had elevated volume, because that's breakout volume. You want to be going extended the other way. You know what I'm saying? You want to be extending away and have the volume, not the first push of a breakout. So, if that makes sense. Anyways, it does work really good on small caps too. I mean, I didn't look. Let's see. Let's go on the 1 minute chart, right? I mostly use 1 minute chart for this thing had no volume over there, but as you'll see, guys, right? The stock comes down. You can't really use it right off the open because there's so much volume, but you'll see the reversal candle right there. Look how big it had. And then when you come down, you try to get a bounce. It reverses on the little elevated volume right here. It tries to bounce, reverses on the elevated volume again, but this thing volume just died so fast after that. Not much of a thing. I'm trying to think what else we had on. Hold on. What other stocks were moving? Thursday we had KZIA. This video's kind of just turned into a rant. I just kind of freestyled this, guys. I didn't really know what I was going to talk about, but I just like making videos sometimes. So I guess it's a little too crazy for the 1 minute chart, but let's see on the gap up day. All right, this is a good example, okay? Again, highest volume of the day right here in the reversal, right? Guys, it's volume spiking, boom! Reversal volume. Good indicator to short if you have a key level there, daily level, whatever, And then it comes down, and then it goes up. Where should I add to my position? Boom! Stuff trigger on reversal volume. Yeah, you can add right there. And then it starts to bounce again. It goes up. Boom! Reversal volume right there. Watch the volume, guys. Don't want to short if the volume's just going like this. Let's say these candles went like this. One candle, the next candle was a little higher, the next candle was a little higher, and this was just grinding high. You don't want to short that. You want to short the quick boom on spike volume. That's where you want to be shorting because it gets exhaust fast, right? It exhausts itself fast when they have that kind of volume. A-T-H-E. Crazy person. All right, let's see. All right, all right. Let's see if we can put the pre-market data on this one and see if we, because it fell right off the open, as most of them do, the first 1 minute candle, guys. You'll notice that a lot in small caps. It's like first 1 minute candles like dump. Anyways, all right, so guys, obviously it can't, like I said, you can't count it off the open because it's always the biggest volume spike for the most part. But look, right here. Boom, big, huge volume. Now, guys, remember, this is a breakdown volume, too, so you can't count that if you're trying to long. Comes down right here. Look at the volume on that candle. Two littles and then a big right here, and then it bounces. But we'd be trying to short in the downtrend. So, look, Right here, guys, you get the big candle, it pulls back. Then you have little candle, boom, big candle for the reversal short, right? And then bounces, boom, big candle again, reversal short, big candles, right? See, guys, look, reversal. See how all the peaks line up with the volume? For the most part, not every single time, but a lot of times, the peaks line up with the volume. This is a good indicator to be able to practice with your candlesticks off and say, where would I short this if I was shorting this? Master the volume, guys. Master the volume. And we'll combine that with everything else. You will be really like just getting more confident and just, and then at that point, guys, all you need to be able to do is stop out when you're wrong. Stop out, take a 1 hour loss when you're wrong. Who cares? Tomorrow's another day, right? Being the best loser wins. Good book, by the way. Stop out when you're wrong and then smash the rest of these piggies with confidence and conviction, right? Use your gap stats. Use your scans to narrow down the best stocks. $1 to $1.50 to $10. Less than 350 million market cap. 1 million volume, which they all have nowadays. Guys, gap stats. The news, dilution piggies, fluff news or good news. Is it dilution? Do they have ATMs? Are they low on cash? Right? Now, find the daily resistance levels. Is it high volume daily resistance? Is there a lot of bag holders? Right? You combine that. Now, we also know that most of these aren't going to spike 25%. So I'm looking for my key levels within 25%. If they go higher than that, great. I'll smash them up there with even more conviction because I know most of them are going to fade until the end of the day. Right? So add all this stuff up. Boom, 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 boom. And don't let the haters fucking hate. It doesn't matter what everybody else is doing, you guys. Only matters what you do. Who gives a shit what everybody else is doing? This guy's making $20 million. That guy's making $800,000 a day. Who gives a fuck, dude? This is your journey. You're on your own journey, and no one can ever take that away from you. Win, lose, or draw. But this, I'm trying to make it easy for you guys. Easier. People put out tons of videos. I feel like the videos just all suck. Say the same dumbass shit. You need to have some fucking, things that can actually help you, right? I don't know. I'm not saying I'm the fucking best fucking video maker in the world, but there's definitely a lot of people that make great videos. But I literally don't hold anything back. I teach you guys everything I know. I don't give a fuck because I don't believe that your trading affects my trading. That, oh my God, small caps are going to stop working because everybody knows the daily levels and volume and gap stats are no, I don't think so. This has been going on for years and years and years. Anyways, this is getting way too long. I'm ranting. Happy Sunday, everyone. I can't wait to get back at my desk tomorrow. Well, I'm at my desk now, but I can't wait to trade tomorrow. I'm moving up my risk this week. Well, I moved it up a little last week, but there wasn't that many small cap trades, so I'm definitely, right now I'm just feeling like everything's going perfect with small caps and large caps. I just am so confident in myself, guys, these days. I know for a fact I'm never going to get smoked in a trade because I stay in my lane. I don't take losses that I'm not supposed to ever. So it's just a nice, free, caring trading space, and I'm out of here by 10:30, 11 every day. I don't give a shit if there's 500 gappers that are going to fade at the end of the day. I like doing real estate stuff, and I don't care to be at my desk all day getting shovel butt, rotting away. So, do what works, what makes you happy, but I always recommend that you guys have some goals and things that you want to do outside of trading that get you off your desk. I think your life will be way better, way more happy. And remember one thing, I'm not a financial advisor. This stuff probably really doesn't work, and I'm the only one that can do it because I'm a loser, baby, so why don't you kill me? I'm just kidding. Anyways, guys, if you have any questions, hit me up, or if you want to me to make a video on anything. I can't always think of the best stuff to make videos on. I just be watching TV on the couch and something pops in my head. Oh, that would be probably helpful. Oh, that might be helpful. Oh, yeah, okay. Anyways, study hard, guys. That's what it's all about. Have the freaking passion to study hard. And if that doesn't work, go get hypnotized for success. Anyway, all right. Later, guys.